Richard, there is one economic barometer which cannot be easily manipulated, and it's remained reliable for thousands of years. Drum roll, please.
But what could that be, Chris?
Precious metals.
Precious metals is exactly right.
And with gold over $1,000 an ounce, wouldn't you agree that the alarm siren has been tripped here?
You would think, but the fact that it is not exploding from here means no, nothing has been tripped. They're going to do everything they can to discredit what is going on. All this gold that people think they own, all they own is, most of them own just paper gold. And when they go down to say, okay, I'm going to trade in my paper and get my gold, they're going to find there ain't nothing there.
Now, think how everybody loves that Street Tracks GLD,
right?
The gold ETF. I challenge you to, first of all, contact your broker, ask them to, you have to pay a fee to send the certificates to you so that you own your shares in physical form. Then I challenge you to march down to either London to trade in your SLV silver ETF. When you do, you're going to be intercepted by two very large and not so friendly guards who will help you to exit stage left post haste. There is no way to trade in your certificates for actual physical gold. So what are you going to direct everybody to eBay and tell them to start bidding on gold and silver?
Well, you know, if you take a look at the COMEX, for example, there's always a force majeure clause. Yeah. You might get your money back, and so you didn't make any money, but you got 90 cents on the dollar back in cash. So I don't know if anybody's really going to want that so much, particularly when gold's going to $3,000, $5,000, $10,000 an ounce. And all you got was your $1,100 back. Assuming that the counterparty who sold you the silver and is defaulting on you has the money. That's the best case scenario. I don't think they'll have any money. Everything's been leveraged 20, 30 times over.
You'd think, Richard, though, that folks learned from the past 24 months. Half of Wall Street is a crater. They're still shell-shocked. When you look at the balance sheets, most of these banks are still levered, and the hedge funds and investment houses and investment brokers, they're still levered 20, 30, 40, 50 to 1. It's as though nobody learned the lesson. People are pounding the table. See, I told you so. Gold had its final hurrah. It ran to 1226, and just like 1980, that's it for gold. Tell people why it might be different this time.
As far as the levered bit concerned, to mean that they were less levered means that somebody lost money. And so that's what they're trying to prevent. When you lose a lot of money, you don't pay any tax on that money. And the United States government and all these other governments are dependent on you making money. And so they're going to make sure nothing happens to all this leverage. In fact, they want more leverage. And as far as gold not going up in the face of such ridiculous monetary insanity, when every other time in all of human history, every time anybody's ever tried this, it's blown up, and people with gold made out like bandits.
Every time they've tried this throughout history. And they printed up a lot of worthless money, and John Law was one, and King Louis and Marie Antoinette in France were another, but nobody had the guts to not only game the entire global currency system, but every stock market, every futures market, derivatives, CDSs, mortgage-backed securities, SIVs.
Because it requires an exponentially larger and larger amount of money. So it needs $2 today, $4 tomorrow, $8, and 16, then 32, then 64, then 128, 256, 1,056. I mean, within a couple of weeks, it's just the amount of money. The computers aren't that big.
So do you think this ends up in Ludwig von Mises, the Austrian economist's crack-up boom? You probably remember how he described that in the final weeks to months of that hyperinflation, we get that last hurrah where the masses wake up and say, wait a minute, nothing has any value if it's not tangible.
That's right, and that's when the rush to tangible assets, particularly gold, really get cranking. It's going to be incredible, right?
Well, Richard, as we wrap up here, for listeners who'd like to find out more about your work, can you tell them where they can find your archives and related information?
At dailyreckoning.com, and GoldSeek has a bunch of them hanging around, too, if I wouldn't be surprised.
I'm sure we do. All right, sir. Well, as always, thank you for joining us on the broadcast, and I want you to have an excellent New Year.
Well, thank you very much, and thanks for the honor of having it in your show, and a Happy New Year to you.